Hey everybody, it's Brian Shannon from Alphatrends.net. Today's Wednesday, the 24th of April, and this market has been recovering here the last couple days. S&P, as we know, dipped down below the anchor from the beginning of the year and just sliced right through it. But we've gotten a nice bounce. Here's the anchor from that bounce so far. So you can see since the beginning of the week, the buyers have been in control. We're back above what is now a rising 5-day moving average. Yesterday, I'd pointed out one of my go-to strategies, which is to buy the market as it gaps above the 5-day moving average, and then after it gets back above the daily volume weighted average price. That's something I've been talking about really for more than a decade, and it's really served me well. We're in earnings season, so it's going to be a stock by stock basis. We have a lot of mixed messages in terms of the market here. The 20-day moving average is declining, so is the month-to-date anchored VWAP. So up in this general area near the 50-day moving average, which that 20-day will come down to, is likely going to be some supply if we continue to move. So if we continue higher, 510, 511 will be the place to look for that potential of supply. For the NASDAQ, we came down to the anchor from the October low. That's that purple one there. And today we tag the year to date from underneath. So short term, we have the buyers in control as we have a continuation higher here, higher highs and higher lows on this shorter term time frame. But we're coming into an area that has the potential to become supply. So, when I look at the markets like this, it's always to me a stock picker's market. I talk about the markets a lot, and each and every day I do these videos for Alpha Trend subscribers, which, by the way, I'm starting a sale today that will end on Sunday. And what you get for that sale for $999, you get 1 year access to 3 daily videos. One is similar to this one. It's generally about 5 minutes and it goes over the markets. Then a little bit later, I do about a 10-minute one, which is highly educational with stock ideas, giving us entries, potential stops, levels of interest on the upside. Midday video the next day follows up on the market and on all those open positions. I do a webinar every other week, every other Monday. That's always there. The purpose of that is for educational questions. I've got a Discord channel that is fairly active as well. A couple hundred people in there participating, and you get access to 2 classes that I have, which are combined about 20 hours of stock market education. So look at the link below if you're on YouTube, or if you're seeing it somewhere else, the link should be obvious. So the NASDAQ, again, we're getting a bounce here. And as with bounces, you've got to be aware that we're advancing on lighter volume. We saw the market declining on increased volume, and the biggest volume, as always, occurs at turning. Not as always, but it's most typical that we see volume expand on the downward move, peak at the low, and then we get a low volume rally. Same is true here in the S&P, maybe not as pronounced, but we saw the heaviest volume at the turning point, followed by lighter volume on the advance. And those are more reasons just to be cautious, not to be bearish. We're getting a bounce here right now. And again, we have mixed messages. So when you have mixed messages, the message to me is always clear. Go slow. Trade the stocks that are the low risk setups. Be aware of the earnings reports that are due out because we're obviously in the middle of earnings season, just beginning the earnings season, really. The Russell 2000 did get a bounce here, and that came from the anchor off of the October low as well. So that's where we saw the bounce materialize from. And now where is it bounced to? Right up to the year-to-date anchor, which is also the month-to-date anchor in this general area. We've got a declining 20-day moving average. We have a declining 50-day moving average. And tomorrow, that 50-day moving average in the next couple of days will accelerate to the downside as we get rid of these days and replace them with days over here. So Russell 2000, be very careful with this one. If you're in it for a bounce, then use the definition of trend, higher highs and higher lows. This right here is the most recent relevant higher low in the Russell 2000. Semiconductors also have the potential for some supply up in about this prior band of support near 215-ish. So we're getting close to that. We've got the month-to-date anchor and the 50-day moving average in that area. We've got the 20-day moving average bearing down on it as well. So this becomes a strong level of interest up in this area. We saw the same volume pattern here. Increased volume on the way down, biggest volume at the turning point, lighter volume on the rally, marks this as suspicious. We have that declining 5-day moving average, so it's still not to be trusted. Mixed messages. Biotechs, they came down to last year's anchor in the 200-day moving average, and they've experienced a bounce. But that bounce right now, on average, the average bounce participant from the low on Friday, we are below that level, meaning the average long in here is now losing money. Not a lot, but it's worth noting. If we can maybe do something like this and then recover a little bit, we could rally. Right now, though, I'm highly suspect of the biotechs, thinking that maybe we're going to get a retest over here on the daily time frame. And if that's the case, then I don't think you want to be a buyer of the biotechs. Financial stocks have been the strongest. They don't know what resistance means when it comes to the anchor from that peak. We are, however, at this prior support, and we've experienced a rally that has brought this market from 39.5 to 41. So a decent little rally, and same volume pattern. Increased volume on the downside, heaviest volume right at the turning point, followed by lighter volume on this rally. Only price pays. I say it all the time. People will complain, hey, the rally's on light volume, but if you shorted it at 40, at 40, 50, or 41, you're still losing money. You're losing money on light volume, but you're still losing money. And this game is about making money, not about volume. So if we break below here, I think you want to protect your gains if you've participated in this bounce, from an intermediate term standpoint, certainly. Energy names, they've rallied up and hit this anchor from the beginning of the month twice, made higher lows after those, and now we're at it again. So I think the energy names you ought to be paying pretty close attention to, especially when you look at the weekly time frame. We've got this area right in here, which was previous resistance, now being tested as support with a rising 10-week, 50-day moving average right there. That's what this is. We've got that 20-day moving average still rising. The anchor off of this peak here from last week, you can see, is cradling under this market, and that's where it's finding buyers as well. So if you get involved in these, I think your worst case stop probably goes right around that 95 level. And then the key is maybe you get a little bit of a pullback in the morning, buy some strength right in here, and then set your stop underneath that level. Once it starts to get moving, you raise your stop under here, and that's the type of guidance I provide each day, again, for Alphatrends subscribers. So thanks for tuning in, and look for that link for the sale in the comments just below.